Good morning and welcome to our 10th Annual Financial Executive Forum. I want to thank you for joining us today. This is the second event in our 2024 webinar series, and we really appreciate you joining us again today. I'm Grant Palmer, and I'm a partner with Cordia Resources by Cherry Beckert, one of the sponsors of this series. As you will see, we also have 4 other great local sponsors who I will introduce shortly. I also want to thank and acknowledge Cordia Resources by Cherry Beckert and Don Olinger for the great CFO Roundtable event they put on for the FEF group last week. Our sponsors were excited to see such a great response, with over 600 people registered for this series. We know and understand how valuable these high-quality and relevant training events are to financial professionals managing corporate accounting and financial functions. Once again, we're providing this series in a fully virtual format and running it in 2-hour sessions every Thursday morning over a 6-week period of time. We found that this format works best for our collective clients and friends. Today, we're joined by the Cherry Beckert team, who will be presenting Anchoring Your Foothold in GovCon in DCAA's Hot Topics. You should also know that we have a great team from Cherry Beckert running our virtual program today, but please bear with us should there be any technical issues. As you can see, we have 6 great programs for you in this series. If you fully attend all 6 events and you're a CPA, you can earn a total of 12 full CPE hours. Our series includes the following. As mentioned earlier, last week, the Cordia Resources by Cherry Beckert team presented our CFO Roundtable, which once again included an informative discussion with an impressive group of local CFOs and a CEO. Today, the Cherry Beckert team will present Anchoring Your Foothold in GovCon in DCAA's Hot Topics. Next Thursday, Jennifer Lewis will once again join us as our ethics instructor from the AICPA's Business Learning Institute, and will teach our Virginia Ethics program. The 2-hour course is required by the Virginia Board of Accountancy. On October 24th, Marsh McLennan, a new sponsor to the Financial Executive Forum, will present Managing Your Risk, Innovation in Employee Benefits and Business Insurance. On October 31st, the Wells Fargo banking team will present their Economic Outlook and Capital Markets Update. And finally, on November 7th, Sage, also a new sponsor with the FEF, will present How AI and Digital Networks Will Shape the Future of Accounting. Before we move forward, I'd like to cover our basic CPE webinar rules. In terms of NASBA compliance, our polling questions will appear throughout the webinar. You'll need to answer 75% of the 8 polling questions to receive full CPE credit for each session. Any answer to a polling question, correct or incorrect, counts towards the 75%. Since you'll be muted during the entire session, please use the Q&A feature to submit your questions to the panelists. Please use the chat feature to communicate any technical issues. After the program, please complete the session survey using the link that will be sent to you in a post-event email. Your CPE certificates should be issued within 10 days of this course, if not sooner. If you have any questions, please reach out to Cherry Beckert Learning at cbhlearning@cbh.com. Now I'd like to acknowledge our great team of sponsors for this entire 2024 Financial Executive Forum series. Our first sponsor is Wells Fargo. Wells Fargo Bank. Wells Fargo is a well-known national bank who is represented by Ben Kane, their Senior Market Director. Wells Fargo Commercial Banking is a returning and longtime sponsor of the Financial Executive Forum. Our second sponsor is Marsh McLennan Agency, a leading provider of business insurance, employee health and benefits, retirement, and private client insurance to organizations and individuals. Marsh is a new sponsor this year and is represented by Allie Gregory, an employee health and benefits consultant. Third is Sage, a leader in finance, HR, and payroll software. Also, Sage's digital network connects SMBs, reduces friction, and delivers insights by digitizing business processes. Sage is also a new sponsor this year and is represented by Letitia Bradley, Senior Partner Marketing Manager at Sage. Our fourth sponsor is Cordia Resources by Cherry Beckert, a leader in recruiting and staffing services in accounting and finance, technology, HR, Contracts and Administrative Support Services, and is represented locally by Doug Smith, one of our key managing directors who leads our sales and staffing services team at Cordia Resources. Our fifth and final sponsor is Cherry Bekaert, a top 25 nationally ranked accounting firm specializing in tax, audit, outsourced accounting, advisory, and system services, who is represented by Tracy Sheps, a CPA and a partner at Cherry Bekaert. And this is our full agenda today. Now I'd like to introduce Tracy Sheps and Brigida Scott, both partners with Cherry Bekaert, along with Jeff Anessa, a senior manager with the firm. Tracy and Brigida will present Anchoring Your Foothold in GovCon, and will be followed by Jeff, who will present on DCAA's hot topics. Tracy, take it away.
Hi, everyone, and thank you for joining us this morning for our session on Anchoring Your Foothold in Government Contracting. I'm Tracy Sheps. I'm here with my partner, Brigida Scott, and I lead Cherry Bekaert's government contracting industry practice with over 25 years of experience from accounting operations, regulatory compliance, and accounting and business systems expertise. Through my years, I started in industry and went into consulting because I enjoy helping clients so much, and have seen a large variety of scenarios from within companies of all sizes. And I will let Brigida also introduce herself.
So my experience is very similar to Tracy's. I'm Brigida Scott. I'm also a CPA and partner with Cherry Bekaert. My experience spans also over 25 years. I did start in public accounting, doing the traditional audit and tax for government contractors, more on the small, closely held businesses that had, we did the audit, the tax, we pretty much did everything for them, but they were the government contractors in the small business programs that were growing at the time. I moved on from there, actually went to work for one of my clients and was in operations. They were a small startup company that ended up going public. It was a crazy life for about 4 to 5 years, and then went back into consulting, where I spent the next 14 or so years doing cost accounting, internal audit, a lot of different things for everything from the small startups to the mid-size to large to major contractors. So a whole span of work. And that's where Tracy and I actually met and have been working together now for the last almost 20 years. We have a great partnership, friendship, and work extremely well together, and have just been great teammates and enjoy the time together. So came over to Cordia Partners, which was acquired by Cherry Bekaert a year ago, and now I lead the outsourced accounting practice within the government contracts practice at Cherry Bekaert. So today we're going to be talking about different things to do with the GovCon maturity model. So as we said, it's anchoring your foothold in GovCon. So maturity model from the standpoint of what it takes to be a small government contractor or just starting out to grow to be a large government contractor, and all the different things that come with it, from infrastructure needs to compliance concerns to audit risk, and then all the different success factors, maybe not all, but we're going to hit on a lot of the success factors that are important to you as you are on your journey along the maturity model. So here's what we're calling the maturity model as the GovCon growth trajectory. So there's 5 different levels. So it kind of matches or mirrors what you mostly see as a maturity model. And this is maybe not one you're going to see out on the internet, but one that we've developed to mirror from our experience, what we've seen over the many years of working with different size, different categories of contractors, and that we wanted to profile to you today with the different elements that we see as important to visualize and plan for. So level 1 is pre-revenue. That's where contractors, are just getting started. Level 2, we saw a small business, and we'll profile each of these for you separately. Level 3, we categorize as the small to medium-sized contractors. Level 4, you advance into the large business. And again, we'll categorize those for you in terms of what that means, size of revenue, types of contracts, things like that. And then level 5 is the major contractors.
So regardless of the stage of your growth, you will always have to be aware of changes and impacts to your business infrastructure, continuing compliance concerns, and growing audit risk. Most of this is all driven by the types of contracts that you have, and sub versus prime as well. So based on those circumstances, we will review some of the business infrastructure, compliance, and audit risks for each level of company. The various contract types going off the slides here.
Mm-hmm.
Okay, now stay. Various types of contracts are fixed price, time and materials, and cost plus fixed fee. And most everyone knows that these are types, and there's many different flavors within them. From the firm fixed price, where the contractor really is assuming the majority of the risk. That's how it's always been looked at. I know today there's times when contractors are very efficient and they do very well on a fixed price contract, but generally it's thought of this way. And the government basically agrees to pay a firm price for the work that's to be done. Contractor prices the work and is paid that set price regardless of the cost they incur. So if they incur less, they're still getting that fixed price. If they incur more, they're just getting that fixed price for the most part. Government typically issues a fixed price type contract when the cost risk to the government is low and requirements are well defined. So that's typically when you see those types of contracts, and you also typically see them when you're first starting out, and I know that's where a comfort level is. So then time and materials, and this contract's a bit of a mix between the fixed price and cost reimbursable, and the government is typically assuming more risk than the contractor. Basically a T&M, building up your rates by taking your labor and adding your indirect costs and a fee. And then you get a fully loaded rate, which is billed by the hour to the government. In this case, the government issues T&M type contracts when it's difficult to estimate project scope or when it's hard to anticipate the costs. So then getting into cost plus fixed fee, which I know to many of my clients sounds very scary, and it doesn't really have to be, but the government assumes the majority of the risk here, and they definitely used to. Things have changed, and there's caps within cost type contracts now and different dynamics that make it a little bit complex to understand based on what you're issued. Contractors reimburse for direct costs, plus your indirect expenses and a fee or profit, up to a stipulated amount, and you cannot go over without prior approval. These are typically seen when the final quality of the project is more important than the cost, though it requires more oversight to maintain efficiencies, as you might imagine.
Oh, we have our first polling question.
Yeah.
So everybody take note of that. Okay, pre-revenue, that was our first level. Each of our profiles are going to look like the format that we have here. So they'll be consistent layout, so everybody can start taking note of the layout. We'll have a profile. We'll lay out the business infrastructure concerns or areas, compliance concerns, and then audit risk. So for pre-revenue, a profile of somebody or a company that's in pre-revenue, you have a new business concept. This is all going to be typical also. So kind of your average, obviously is like even what Tracy said about like the contract types, there's many flavors. There's the atypical, there's the one-offs, the two-offs, the 10-offs, there's lots of different variations on all of this, but we have taken the position or taken the mode here that this is kind of the typical format or a typical way you see things. So if your experience is a little bit different, don't be concerned. Or if you feel like this doesn't mirror what you're experiencing, don't be concerned. So back to the profile. Profile of a pre-revenue company would be a company that has a new business concept, or you've been previously focused on R&D, or you're starting to bid on your first contract. It's likely going to be a fixed price contract, as we talked about just previously. From a business infrastructure standpoint, you're going to want to think about putting in an accounting system. Along with that, a timekeeping system. And this is coming from the perspective that you're wanting to get started doing things correctly from the beginning. You also want to start thinking about setting up a contract brief system for when you get your first contract, and that be some practice that you put in place for every time you get a contract, that you brief the contract. Briefing a contract is essentially summarizing the key salient points of a contract. So you've got the summary handy. It's got all the salient points, period of performance, the customer, contract number, funding, contract value. I could go on and on. There's lots of different things you want, but it's summarizing it in a brief, a brief meaning, again, a summary. From a compliance concern, you want to start keeping your books on a GAAP basis. GAAP basis means accrual basis accounting. So if you've been doing anything previously, just keeping your books on a cash basis, maybe for tax purposes, this is the time to start changing that to accrual basis. You want to start coming up with your own estimating techniques for coming up with how you're going to bid on contracts. And you want to keep that a consistent methodology that you're going to use over and over again as you approach new contract proposals. And then there's a couple key starts to how you're going to want to be aware of different things in the FAR that are kind of foundational as well. Early parts of the FAR Part 3, Code of Business Ethics and Conduct, things you want to avoid, the gifts, gratuities, kickbacks. You want to have your hotline posters up. You want to be aware of the whistleblower protection. There's a lot about procurement integrity in FAR Part 3 that you want to just be mindful of. At this point in time, your audit risk is pretty minimal. So you can perhaps sleep well at night, even though you might be starting to feel a little overwhelmed, but your audit risk again is pretty minimal. So moving on then to the next level, level 2, small business. So this small business, the profile here is you fall within the size standard by revenue and or number of employees that are considered small business. You likely have fixed price and maybe a few time material contracts. overall, you have a significant, not a significant number of contracts. So you're just starting out, but you've got more than one, more than two, but not 20 at this point. And as a small business, you likely qualify under FAR Part 19 small business programs for like under the 8A program, small disadvantaged veteran-owned small business program, maybe women-owned. There's other programs as well that you might qualify under. From a business infrastructure perspective, everything here is also additive. So we've already talked about accounting system, timekeeping system, putting contract briefs in place. Now you're adding some operation type roles into your company. You're looking to add a payroll system or payroll processing company. HR is taking on a larger role, hiring, benefits. If you have SCA or Davis-Bacon employees, they may come into play here. Indirect rates. So a couple words on that. Even though you're fixed price, maybe T&M, so you don't need rates to necessarily add to your to come up for pricing, you might want to start calculating your indirect rates for just how you're doing as a business. You definitely want T&M billing rates, and so the indirect rates would also feed into that to make sure you're recovering all your costs. You're now looking for tax preparation services that are perhaps more akin to a growing company. Other contracting vehicles are ones that might pique your interest, like OTAs, other transaction authority. GSA schedule might be something that you're also interested in. And you might be looking into the SBA Mentor Protege program. From a compliance concern, the small business standards are set by SBA on an industry by industry basis. And the NICE codes can be found at 13 CFR 121.201. If you want to spend time looking those up, you can also search the internet. Accounting for unallowable costs. That's going to start to become key. That means segregating anything that's not an allowable cost. So FAR Part 31 becomes your friend. That's where all the costs that are expressly unallowable or associated unallowable are listed. And so you'll start to become familiar with those if you're not already. And then back to proposal pricing and estimation. Consistency and methodology and techniques are just paramount, that you're doing things consistently here. And then again, I shouldn't say again because we haven't talked about it, but fixed price contracting can get a little squirrely with revenue recognition. So it becomes more and more important that you understand what revenue recognition means under ASC topic 606. So from an audit risk standpoint, I'll start with the bottom one first. You're still pretty minimal risk from a government audit risk, but from a financial statement audit risk, and it's not really a risk, it's just a requirement. If you're in the 8A program and your sales are greater or equal to 10 million, you're required to have a financial statement audit. So that means an external accounting firm, CPA firm, would need to come in and do a financial statement audit.
Coming over to small to medium-sized businesses, and I couldn't help but see a pop-up ask if we were going to talk about commercial entities wanting to get into government contracting. So this session doesn't necessarily cover that, but I will tell you, Brigitte and I have done that throughout our career together quite a bit. So definitely happy to chat about that offline. So the small to mid-size company, which, defined loosely 10 to 75 million in revenue. You have a variety of contract types, including cost plus. You're sizing out of the small business programs. You have more competitive procurements, and you're typically moving more out of a subcontractor role and into the prime role. Your business infrastructure is definitely evolving, or should be. You are looking to have a sophisticated ERP accounting system that handles, your indirect rate allocations across your projects. There's an integrated labor distribution and definitely a project ledger. You may engage an outsourced accounting firm and add that in. It's basically get instant staff with controls that you do not have to manage, or you will staff up your accounting department effectively. This is no longer where your tax accountant is doing your accounting, or the owner is still doing their accounting. And yes, we have seen that, etc. So you definitely need to have controls and an accounting department that understands government contracting. You will definitely need access to capital or a line of credit. And so improving your bank relationships is really important. And I think that's something that contractors don't often understand, that they need to be getting into good relationships with their banks. It will prove to be very, very fruitful. You will most likely need an accounting manual and your process and procedures documented. You're building strong internal controls, and that goes back to what I mentioned about accounting. You may be getting into joint ventures, and those are very popular again. I feel like they go up and down through the years that I've been in government contracting, and they're definitely hot today. So you might partner with a small to help and mentor them, or even a larger business for some qualifications. It just kind of depends on where you're going and what your needs are. You also want solid contract management, and whether that's in-house or outsourced, it's very important that you understand what your contracts say as we get into compliance and audit risks on this. So you may be thinking about succession planning as well. Start thinking of who's going to take that baby that you've created and keep it going. So your compliance concerns are definitely getting more complex. You may look at, in your pricing, having TINA compliance, which is basically disclosing your cost and pricing data and certifying it. A lot of times that's for sole source opportunities, that you're giving truthful, accurate, and complete pricing. And it's also typically when there's no established market price for what you're offering. You will typically have your annual provisional billing rates, your PBR, as they call it, that you will submit and get approval. And also your annual incurred cost submission with certain clauses in your contract, which is why we say definitely know your contracts. You always have to follow Department of Labor, but you are definitely more spotlighted as you grow, and they pay attention, let me tell you, because there's so many nuances in government contracting. Also, if a DoD contractor, you're probably looking at CMMC readiness assessment, whatever level you might need for the types of contracts you have. And you need to look out for the various agency FAR supplements, such as DFARS, which is for DoD contracts. There are many others. And more complicated contract closeouts that you have to pay attention to. So as you get more contracts, you start forgetting about the contracts that are closed, but you can't forget about those. So there's, formal process for that as well. Then there's the audit risks. And again, like Brigitte said, not really risks, but it's things you need to pay attention to and where they will audit you. So for cost type contracts, you are definitely going to see an accounting system review, which they call pre-award or SF 1408. You hear them call it different things, but kind of it's the SF 1408 everybody's always talking about. You might have a labor force check. And again, that's another area where I've seen and it probably depends on how DCAA is staffed up. It's very popular. You come in with no warning, talk to your people. You need to make sure your people are trained, and we'll talk more about that. But always make sure your people understand why they are charging indirect or direct costs. And then DCAA, or whatever your cognizant agency is, review of the PBR and the ICS. You know, we see, I'm seeing a lot of DOE lately handing out DCAA information to their contractors.
For sure.
I was surprised that it was that detailed that they were giving, but they're giving good guidance and pointing back to DCAA. Your contracting officer or your ACO approval of your final indirect rates. You might, depending on your amount of employees, require an ERISA or 401k plan audit. And then, of course, potentially once they finalize the rule, finally, your CMMC certification. Oh, and we have a polling question. Make sure you get your CPE credits. So from a subcontractor versus prime contractor perspective, we just put a few things together to show you the different variances and nuances of each. So the subcontractor is reporting to the prime contractor, right? You're getting everything from them. Where the prime contractor reports directly to the government customer, and they are responsible for their subs and ensuring that they're following all the same rules that the contract requires. So the subcontractor typically has a narrower view of the contract, only have a piece of the scope. They tend to be smaller businesses, not always. And a lot of the procurements require the prime contractor to be a small business. So there's oftentimes they're going to be the sub. Where the prime is responsible for the contract's full scope of work. So everything they're doing and everything their subs are doing. So they have to manage those subs closely. Prime contractors typically tend to be larger businesses, but again, like I was speaking on the subcontractor side, they can be also subcontractors for their smaller businesses. So there's definitely nuances, and things are evolving over time where these things are definitely more intertwined, if you will, throughout the growth of your company. And some contractors, in comparison to large prime, they're very niche focused. So they have a specialty that the large prime may not have. And that's often reason for subbing out the work. Subcontractors will also respond to the RFPs developed by the prime, and the prime contractors are responding to the RFPs developed by the agency customers, which is a much larger net of people. To manage your subcontractor risk, these are just some areas you need to look at to ensure that you have a solid contractor. You know, sometimes we see, you know, it's kind of a knee jerk, you know, we need the skill set. We're gonna take this subcontractor, but you really want to know them, and you're following FAR Part 9.104 that the contractors are qualified to do their business with the government. So they have adequate financial resources or the ability to obtain them, be able to comply with the required or proposed delivery or performance schedule. They have a satisfactory performance record, very important, and a satisfactory record of integrity. And they have the necessary organization, experience, accounting, and operational controls, and of course, technical skills to perform the work. Otherwise, they also, obviously, we think it's obvious, they also need to be lawful and that they are following all the regulations.
So we mentioned before that internal controls were one thing that you were going to be putting in place if you were a small to medium-sized business. So we wanted to define exactly what an internal control is. It's the process for assuring achievement of an organization's objectives. And there's three areas that the focus is in: operational effectiveness and efficiency, reliable financial reporting, and regulation and policies. So all three of those objectives need to be met for an internal control to have its sustainability or substance. We have here and switch the slide. Some examples of internal controls. Some of these are going to sound familiar. Some of these maybe you hadn't thought of as an internal control, but they're all things that help an organization be more not just organized, but be more, and I don't want to say in control, but have better control over its books, records, financial reporting, all the things I just talked about. Good segregation of duties, meaning you don't have the same person, approving, and, taking custody, for instance, of cash. Access controls. You don't have somebody with full access to everything. So somebody who's counting inventory also has the ability to, have the keys to the warehouse, for instance, so they could, pilfer from the warehouse if they needed to, or somebody who is, not in IT has the ability to change the access of the accounting department's access rates. Or maybe it's a lower end person has the access controls or has the right to change the access controls. Physical audits. You do physical audits of inventory. You do physical audits of your check stock. You do physical audits of other things that you make sure that they actually exist. The bigger ones that are kind of the things that you end up seeing regularly are standard documentation. So everything is documented following a same protocol. You do reconciliations, definitely of cash, of your investment accounts, your bank accounts. You make sure cash is always reconciled. Cash is king. You have an approval matrix, approval authorities. And you do have, as we mentioned before, formal policies and procedures. So people know how to do things. They know what the policy is, and they know what to follow. So under accounting policies and procedures, we have a couple reasons why we wanted to point out they are so important. Why we've mentioned them 3 times now. In the documentation of a policy manual, DCAA will definitely, when they're doing the accounting system review or audit, they will definitely ask for them. They'll ask for the manual. We do a lot of this for our clients when they're going through their first accounting system audit. They want to see what all the accounting policies are. So compliance with FAR and CAS. It's a good communication with the employees. Again, it's a consolidated way to present to you or to the employee, here's how we do things. It's not by word of mouth. It's not a, kind of grassroots way of doing things. It's the communication. It's just a sound business practice. From an independent auditor perspective, if you do have to have an external financial statement audit, it's definitely, we say required by the independent auditor. Some auditors may not require it, but it's more and more required by the independent auditor. If you're going through due diligence or some sort of transaction, we've seen it being part of the due diligence package. They want to see what your accounting policies and procedures are. So we're at level 4 now on the trajectory, large business. So here you're around the 100 million to 500 million in revenue typically. You probably have cast covered contracts. You are looking at IDIQs, GWACs, maybe even grants. We see more and more companies moving out of just typical contracts, and they may have grants also in their portfolio. And typically you're still privately held versus publicly traded. But again, this is typical. From a business infrastructure standpoint, you also now have the ability, you need to be able to demonstrate you have the ability to follow your disclosed practices on a consistent basis. So that means from CAS 401, pricing and estimating, accounting and reporting, you're consistent across the board. You probably at this point have an in-house accounting function, and your department is pretty, well, it depends on the size of the company, of course, but it's probably a fair size. You probably at this point have an FP&A function as well, and you're using more robust budgeting tools. Procurement function or purchasing system is possibility. You may have subcontractors, you may be processing materials. That's where the procurement function and purchasing system would come into play. Estimating system. At this point, you're more than likely going to have an estimating system. From an internal audit perspective, this is where we've typically seen where you're going to now want the internal audit function, but you're potentially outsourcing that. And this is where governance, again, kind of ties into the internal audit, but it also ties into a good sound business practice, where you've got another level of governance, which we'll talk about in a minute. From compliance concerns, oh, maybe I should talk about that now. Somebody thinks. Yeah, I can talk about governance now. So some important concepts around that. So governance is that other level of perspective of a good sound business practice, but it's also that layer of good just authorities, a good level of these number of things that we have listed here. So you've got a good approval matrix. So, you know, if it's writing checks or signing for procurements, you've got, or even contracts, you've got a good level of who's going to be able to approve things, who's going to be able to sign contracts, you know, whether they're at different dollar thresholds or agency thresholds. For vendor procurements, it could be, you know, at certain levels, up to a certain other level, up to a certain other level. It could be a single individual at his or her title, and then they may add on another layer kind of thing. These responsibilities are documented. There could be checklists around, maybe it's the payroll function because you've got multiple levels of processing a payroll. Maybe there's multiple payrolls. I personally have one client that has a very good governance structure around their payroll structure or their payroll processing. It was pretty complicated, multiple departments, multiple types of payrolls going through it, different types of people getting paid differently. And it took in multiple states as well, multiple jurisdictions. And it took a number of different people involved, and they had a good governance structure along with a good checklist that they employed that made sure everybody's, you know, I's were dotted and T's were crossed. Other resource documentation is available, frequently asked questions, policies, desktop procedures, manuals. So you've got kind of all of that, those boundaries documented and available to folks. You put out education and training. If there's change management, you've got a process for change management. There's an inspection and oversight to make sure things are being done the way you've documented them to be done. And the people in charge have the knowledge and experience, and they're also accountable and they're transparent about what's going on. So it's that other level or layer within the organization that is important to make sure things are just running smoothly. Okay, I'm going to backtrack for a second. Maybe. And talk about compliance concerns. So as I mentioned around business infrastructure, the ability to disclose your accounting practices, this is where also from a compliance concern, you're probably bidding on contracts that are CAS covered, as we said in the profile. So you would need a disclosure statement. That's where you disclose all your accounting practices along with some other information in a prescribed format and form. CMMC, you've got continued surveillance around that. Executive comp is probably coming into play now. The executive comp limit for 2024, it used to be higher and it's come down, but it's 646,000, just so everybody knows, for the year. And then of course you've got to add reasonableness and allocability to that before you can take a full 646,000 as executive comp. You might have to worry about the False Claims Act, or well, everybody has to worry about that. You just need to be aware of that. Equitable adjustments, the clause may be in your contracts. Those may be coming into play. Terminations. We don't see too many of those, but contracts get terminated all the time. You might have a quality assurance program that you need to put in play. That's more on the procurement side. And then inspection and oversight. Audit risk, again, if you've got a purchasing function, the CPSR, Contractor Purchasing System Review, is potentially going to be in your audit risk profile, estimating system review, and then CAS audits. If you've got a disclosure statement on file, you will have CAS audits. Oh, and our last polling question. Number 4 is up.
Well, for this part of the session.
For this part of the session, sorry. So last item here is major contractor. Greater than 100 million in audible dollar volume. That means flexibly priced contracts. This is part of the profile. You could have multiple divisions and subsidiaries, and you're usually publicly traded or listed. Business infrastructure, you would have business segments that are disclosed, that have disclosed practices. Probably internal audit is now in-house. Of course, if you're publicly traded, have SEC reporting. You probably have litigation support or legal in-house. You may have some cost accounting practice changes. You may have international practices that you need to worry about. And if you're foreign owned with U.S. presence, you do need to worry about having the proxy board with related foci compliance. From an audit risk standpoint, you might have other business system audits, MMAS, government property, or EVMS, continued CAS audits, and then I mentioned grants before. You could have program-specific audits related to grants, or even just because.
It's the government. It's always just because.
Yeah. No, you're bear of a time changing. Over to you, Tracy.
Yeah, thank you. This is just to sort of wrap up and give you the bigger picture of success factors. So wrapping up financial information, familiarize yourself with your financial statements or work with someone to help you understand them. Definitely develop some meaningful KPIs or metrics so you know where you stand. Understand how you compare to your competitors and determine your differentiators. That is key. With your personnel, staff correctly, from accounting, HR, contracts, IT. Outsource it or staff it, but make sure it's solid. And train and mentor regularly. That is also very key. Everyone in the firm needs to understand what they're charging, what they're doing, the rules, unallowables, etc. Which brings us to communication. That is key. And tone at the top, doing the right thing. You break down your silos and ensure everyone is aligned. As far as your network, surround yourself with good mentors and advisors. Most of the government contractors we know are all helping each other, and they help new government contractors getting into the market. So surround yourself with those people, or even good service providers, who will also often, chat with you for free. We're all about education. And bottom line, integrity is doing the right thing even when no one is watching. One of my favorite statements. And let's see. Lastly, for wrapping up compliance, don't go in blind. Understand what you're venturing into when you have a new contract vehicle or a different type of contract. What are the requirements and can you meet them? Can you afford the immediate investment required? Definitely had clients that decided, and I'm not saying this is the right answer for everybody, but just decided that they were not ready to get into any cost type contracts. And actually, I hear that a lot. They just weren't ready to have the right infrastructure and the cost that it would take. And they stayed. It's a personal decision for your company. And staying with fixed price contracts, things like that to reduce risks, perfectly fine. But you do what's right for you as long as you understand what you're getting into. Training. Definitely keep up with new laws and regulations. Free training is offered by many firms, or work with them to come out and prepare training for your people. Dual purpose compliance training to maintain your certifications. So whether you're CPA or certified project management professional, whatever the case may be, wrap those together and get the training that you need. Internal audit and review. Evaluate internal audit or review function so you have periodic compliance reviews and ensure you are ready. Compliance readiness. In advance of a formal audit, consider having an independent evaluation. You have an audit readiness or a business system readiness or CMMC readiness before you go into the audit, and then work to implement the corrective action plans. Stay audit ready all the time, and you will never be nervous about an auditor coming in. Okay. Some success factors for your audit readiness is document, and ensure you are actually doing what you say you are doing in your documentation. That is key, and that will be tested. So just having a written plan that you don't even know what it says, that isn't going to help you. And I've heard the government tell contractors that directly, to make sure if you're working with a firm that's educating you, that they actually are educating you and not just handing you a standard manual. So make sure you can support all of your transactions, have backup memos for any important decisions or anything that might be considered, that might be borderline for an auditor. Keep your support in why you made that decision that this is allowable, or why you made that decision that this could be charged to the contract, etc. I think you get my point. Engage and educate, to be sure that you are ready because you're going to have more exposure to audit. And then learn about the additional audit risks that are related to the new contract types. Very important. Before making any change, perform an analysis so that you're aware of the impact to your contract portfolio. Again, don't go in blind. Understand what you're getting into. There is an investment required for doing business with the government. And, that goes out to my folks that were asking about commercial to government. There's definitely an investment that you need to understand. Questions, I think I answered most of them. Looking at this one, JVs, can you describe what you see for typical accounting for these? T&M contracts, in particular, the billing. Does each member typically create a monthly invoice for the fully loaded labor to the JV, which has a separate name? One member takes the accounting lead, et cetera. So yes, we have a lot of experience in this, and I will tell you what we typically see, or I'll tell you my opinion, and then Brigitte can pipe in. But basically, I see T&M, I see cost type contracts, and each member does typically, if you have an unpopulated JV, which I see is most popular, each member typically creates a monthly invoice for your fully loaded labor to the JV, and there's no fee, goes into the JV typically, and then you're going to get your profits and everything from the bill from the JV to the government. So that's my typical that I've seen. There's definitely variations. That's just a most popular.
Yeah, and then one of the partners or one of the members of the JV does take the lead on the accounting.
Yeah, yes. Sorry about that. Yes, absolutely. Thank you.
But otherwise I agree. Yeah, that's typically what we see.
Yeah, and we used to think that it was the main partner, but we see both either side taking control of the accounting. I would choose the one that has the best compliance and the best ability to handle it, and sometimes that's not always the larger party. So, pay attention to that. I think that's all of our questions. We thank you for joining us. Our contact information is here, and I know the recording will be available. And we're going to move on to our 2024 update to DCAA hot buttons with Jeff. And there you go, Jeff, all to you. And I'm sorry, Jeff Vanessa. He's just Jeff to me.
No worries. Appreciate it. Yeah. Thank you, Tracy. Thank you, Brigitte. I think that was a lot of great information, especially kind of at the end where you were tying some of that back to the compliance requirements and then especially what the audits are going to be looking for. So that's kind of what I'm going to focus on in this presentation. It's really an update to DCAA hot button topics, really kind of what is the current trend and initiatives for DCAA, just to keep y'all aware. So I'm Jeff Vanessa. I'm a senior manager on the government contractor team here at Cherry Bekaert. So prior to coming to Cherry Bekaert, and I've been here about a year and a half now, I actually worked for DCAA for about 14 years. So I did several different positions there. I've been an auditor, a supervisor, branch manager, resident auditor, and then also a couple positions in DCAA's headquarters. So I've got a pretty good mix of all the audits that they've done. And then most recently being in that headquarters position, kind of getting the bigger picture of really what is DCAA trying to accomplish and what really is their goals going forward. See if I can get these slides to progress. All right, so what we're going to talk about today, we'll talk a little bit about DCAA's strategic plan and then their audit priorities going forward. They have shifted a little bit from last year. So just having an idea of where DCAA is really focusing for government contractors. We'll talk a little bit about DCAA's report to Congress. So DCAA does issue a report to Congress every year, kind of summing up everything that they've done for the year, what they've accomplished, where things are planning to go. And then we'll talk about some of the metrics that are in there and what they actually mean to government contractors. We'll talk about the peer review firm findings. For everyone that doesn't know, DCAA does have to have a peer review performed every 3 years on all of the audits that they perform to ensure that they are meeting the GAGAS quality standards and as well as their internal quality control standards. We'll go through some of the recent MRDs, and for those that don't know, MRD, it's internal DCAA guidance. It stands for Memorandums for Regional Directors. So we'll just kind of talk about some of the more recent ones. What does it mean to government contractors? What should you be looking for? We'll talk about the executive compensation caps. I know Brigida kind of touched on this a little bit, so I'll try to put a little different spin on it just to kind of give you some more background information, and probably some suggested tips on how you can, try to quantify the reasonableness of that executive comp. And then we'll kind of talk on some of the new and ongoing DCAA initiatives. All right, so these are the different learning objectives that we're going to talk through. Really learning, what are the audits that DCAA has? What are they looking for? What are they focusing on? We'll talk about some of the proposed items that have come from the NDAA, one of those specifically being DCAA farming out incurred cost audits to independent public accounting firms. And then we'll talk again about that executive compensation cap. All right, so DCAA strategic plan. So you can see on the left, we have their strategic priorities for 2024 to 2030. DCAA regularly releases a strat plan. Just because it says 2024 to 2030, they may change it in 2026 if something changes, if the procurement environment is shifting and they need to keep up with those times. But you'll kind of see a correlation to their strategic priorities that are listed on the left side compared to what they've accomplished over the last 3 years. So really on optimized value and customer service, what DCAA is trying to do is implement different initiatives to be able to enhance their communications with their actual customers. Most of that is going to be the DoD buying commands. They're really trying to tailor and streamline their products. So everyone knows DCAA, they're an audit agency. What DCAA is trying to do is ensure and understand, what are their customers' needs? What else can they do outside of an audit? Because, they work regularly with government contractors. And a lot of the major contractors, they have direct access to their systems. They have a lot of information stored on these contractors. So what else can they really do to provide benefit to the DoD buying commands? So you'll see over the last 4 years, what they've really done is put an increased focus on advisory services. And DCAA is pretty much calling anything that is not one of their programmed audits as an advisory service. Some examples of this: forward pricing audits, where DCAA audits a cost proposal that a contractor might submit. Stealing a little bit of my thunder, but DCAA averages around 85 to 90 days on those. And a lot of times, some of these procurements for buying commands might come up and have a 30-day turnaround. So DCAA already knows that they can't submit an actual audit report with an audit opinion. But what they can do is provide some sort of service. They might do a real quick dive on, contract purchase orders or providing reasonableness of certain cost elements. So they really try to work with those buying commands to be involved, even though they might not be giving a full formal audit. So you'll see a lot of that coming up going forward. DCAA, as the sole audit agency for the DoD, does have some competition in forward pricing. There are other agencies that are staffing up. If everyone remembers, I think 2011-ish, 2012-ish, when the PGI threshold changed for the proposal audit threshold, it used to be $750,000 for a firm fixed price that DCAA would perform audits. Since that change, it's been $10 million. And when that change came about, DCAA no longer were performing those audits, and there was kind of a gap. So DCMA actually staffed up their cost and pricing division to be able to help provide buying commands with that assistance. So they've really kind of stepped in to fill that gap. There's other teams, I'm not sure if anyone's heard of this, but the Navy Price Fighters is one that I think last year when I still was with DCAA, that they were significantly staffing up to be able to help in pricing situations rather than buying commands going to DCAA for an audit. So they do have a little bit of competition, which is why I think, DCAA is really trying to shift priorities to ensure that they stay, relative in the community. So the next one is cultivating a premier and diverse workforce. So I don't think this one's anything new. I think year over year, DCAA focuses on retaining employees, recruiting new employees. So some of the things that they have done over the last couple of years that we'll talk about in a little more detail is some of the specific initiatives that they've put in place to be able to accomplish that. For those that don't know, when I was with DCAA last year, I believe they were down approximately 600 auditors to be able to meet the actual work that they had programmed. So there was a big, significant push to be able to hire enough auditors just to perform the work that they had. One of the new strategic priorities is going to be capitalize on technical innovations. I would say this is definitely somewhere that DCAA lacked, really putting a focus on, incorporating new technologies, utilizing AI, things like that. So what they did within the last couple of years is establish that Chief Digital and Artificial Intelligence Office. So they really are making some significant investments both into their internal technologies, things that they use just internally within the agency, and then also looking on what kind of products and tools they can use to better the DoD as a whole. And we'll talk about one of those later on as well. So the last one is really influencing the business environment. A lot of this is focused on meeting with all DoD stakeholders, so not just their customers, which are their, the active buying commands, really focusing on some of those agencies like DPC, Office Under Secretary of Defense, and really taking a bigger picture of, which way is the DoD shifting? How can DCAA help? How can DCAA stay with the times? So that's really where they're kind of shifting there. All right, so we'll talk a little bit about DCAA's priorities. And all right, so it looks like we have our first question coming up. So everyone, please make sure you do the polling question. And I promise I won't be grading you on this on the end. All right, so audit priority. So really, what is DCAA focusing on? So I can tell you, I've done this presentation last year. I've been with DCAA for several years. Forward pricing audits historically was always the #1 focus, or demand audits, things that are requested from their customers. This first year, incurred cost was actually their highest priority in ensuring that they got all of those incurred cost audits done. So that counts as both the internal DCAA incurred cost audits that they're performing, as well as the ones that they solicit out to independent public accounting firms. So as I mentioned, demand audits are really anything that is requested of DCAA by one of their customers. So that can be a forward pricing cost proposal audit. It can be a forward pricing rate proposal audit, some of those advisory services that I was talking about, or any other need that one of their customers might have. After that, as usual, DCAA performing business system audits. We'll talk a little bit more about that in detail and really what they are focusing on. But for those that don't know, DCAA performs accounting system audits, both as a pre-award that I think Tracy and Brigida talked about, the SF 1408, as well as a post-award. DCAA does have 2 different audit programs on the post-award side for what they consider a contractor to be a major contractor or a non-major contractor. And really for DCAA, what triggers a major contractor is a contractor that has $100 million in flexibly priced work. So cost type, T&M, FPIF. DCAA also performs the audits of the estimating system and the material management accounting system, or MMAS. So following that is the Truth in Negotiations Act audits. So for everyone's awareness, this is now called the Truthful Cost or Pricing Data Act. I always leave it up as Truth in Negotiations because I feel like so many government contractors, so many government officials in the procurement community still call it TINA. I think it's a much better acronym than, TC, PD, PDA, whatever that one would be. So a lot of people still call it TINA. This really does center around cost or pricing data and the certification of that data. So we'll talk a little more in detail on those. DCAA still focuses on their high risk, time sensitive, real time audits. So really what that means is those are the audits that are happening live. I know Tracy had mentioned the DCAA labor floor checks and also the material in existence and consumption. So that's where they're coming on site. They're checking your employees' timesheets. They're checking the existence of material against your inventory logs. A couple of the other audits that come up there are the provisional billing rate reviews, as well as paid voucher audits. So I know Brigida also touched on those CAS audits. So DCAA has CAS compliance audits for contractors that are CAS covered. They have specific audits to regularly check for CAS, and then they also have CAS non-compliances that they technically look for in other major system audits or forward pricing audits. So if you are CAS covered, CAS can come up at any time rather than just a singular audit designed to look for that CAS compliance. So operations audits are ones that are pretty far down. I'd say they don't happen very often. Typically, they are always going to be in coordination with one of DCAA's customers, like a major buying command. What they would be doing is, coming down to, say, a manufacturing facility and really looking for labor efficiencies and gaining an understanding of the labor process. Typically, that's going to be in coordination, as I said, with a buying command, also DCMA on the engineering side as well, since DCAA's wheelhouse really is just auditing. So that's always going to be in coordination with several others. And then For those that don't know, DCAA is a pretty decentralized organization. So local priorities, DCAA structure is they have 3 regions and then 4 CADs, which are corporate audit directorates, which are centered pretty much around the big 10 major contractors. So depending on that specific office, that specific CAD or region, there might be a specific priority that comes up there as well. All right, so we'll talk a little bit about their business systems. So DCAA conducted about 512 business systems, CAS, and TINA audits. Now this comes right from their report to Congress, so those 3 are lumped together. I do think I have them broken out further in some slides. But really, what they're looking for is just a potential non-compliance or risk of misallocation. As DCAA is catching up on a lot of their audits, they've caught up on incurred cost. They've caught up on a lot of these business systems. They are having more room in their audit program to be able to look for CAS audits. So if you are a CAS covered contractor, don't be surprised if DCAA has some CAS compliance audits programmed in. CAS 410 G&A is one I feel like that comes up a lot. 403 for home office, a couple of the different ones that they might look for. It's definitely based on risk for the actual contractor itself. So DCAA did recently change within the last couple of years their actual guidance on the audit cycle for business systems. DCAA used to perform these every 3 years. They now perform them every 4 years. And really the goal for that was that they would be able to focus and start auditing more businesses, especially the smaller businesses. Historically, the focus has always been on the larger contractors. So now that they can extend that cycle out, they can really, get a bigger window of GovCons that they can look at. So DCMA, I think, agrees with this. DCMA, from last that I heard, and don't hold me to this one, but they have not changed their actual guidance that states the different cycles. And I know they vary from 1 to 4 years, 3 to 5 years. They're all very different. But when I was at one of the industry conferences, one of the directors from DCMA did mention that DCMA is willing to push out the review cycle for DCMA reviews that they perform on the 3 different audits, which is the contractor purchasing system, government property, and then earned value management. As long as a contractor can demonstrate that the information that's coming out of their system is reliable and that there haven't been significant changes. So to me, you would show that your policies and procedures haven't changed. You haven't had significant employee turnover. You can trace things back to source documents, to reports, and just really shows how all that information can be relied on. So the last bullet that I've got on here is one that I think is pretty interesting. So the NDAA, and I forget exactly which year it was, it might have been 2017, required DCAA to solicit out a portion of their incurred cost audits to independent public accounting firms. So that happened, and they are currently doing that. In the 2017 NDAA, one of the proposed changes was also to have DCAA look at soliciting out business system audits to independent public accounting firms. To date, this is still proposed. It hasn't changed. And I think that's why over the last couple of years, you've really seen a big push for DCAA to catch up on their backlog of systems audits so that they didn't have to lose a part of their business to the public sector. So that's kind of just my personal opinion on that. But as of now, nothing has changed on that rule. But I think for one, that's one that would be exciting for me, because I'd love to see, government contractors be able to go out to their own firms to get this really more in line with their own timeline. We'll talk a little bit about, the differences, at least on the incurred cost side, of the differences that I've seen with some of my clients and the feedback that I've heard from industry on having DCAA perform an incurred cost audit versus the public accounting firm. All right, so looking at forward pricing audits, as I mentioned before, DCAA hovers anywhere from 85 to 90 days. You can see hasn't changed too much. I know the graphic kind of makes it look like there's a big difference there in FY22, but I think we all know how statistics can kind of skew a graph, but they've been pretty consistent over the years and how long it takes them to perform a forward pricing audit. So this is specific to a cost proposal audit. I do believe DCAA runs anywhere from 100 to 140 days on a forward pricing rate proposal audit, but they really do make these a priority to get these to their customers, since a lot of times some of these audits are required for a contracting official to be able to put this on contract, depending on the dollar amount. So really not a big variation over the years. DCAA does continually look for ways, like I mentioned, with those advisory services, if there is a tighter timeline that doesn't really fit this window. And they also work with DCMA on the forward pricing rate proposal audits. And that's really because DCMA requests those audits of DCAA. DCMA has an internal initiative to try to get a forward pricing rate proposal entered into a forward pricing rate recommendation, or an FPRR, within 30 days of receipt of adequate submission from a contractor. They also try to get a forward pricing rate agreement, or FPRA, within 60 days of that adequate submission. Now you can see 30 and 60 days does not really align at all with DCAA's kind of audit window on that. So typically there's some coordination that happens up front with DCAA really focusing on kind of those higher risk areas for their administrative contracting officer to give them something to help enter into that FPRR and FPRA. And then I think once the audit is issued, whenever that does happen, that potentially that FPRA could be amended down the line. All right, so incurred costs. So NDAA is really what dictates the timeline for DCAA incurred cost audits. So within, once the submission is received, DCAA has 60 days to perform an adequacy assessment and determine if that submission is adequate or not. From the date of adequate submission, DCAA has 1 year to perform their audit. And this is, if DCAA waits that full 60 days and it is deemed adequate, then they've already burned 2 of their 12 months. So this also does apply to those independent audit firms performing those incurred cost audits. And, just thinking about the solicitation process, DCAA typically does the adequacy review first. So if that takes 30 to 60 days, then they have to go and solicit out to the public community for those IPA audits. They have to select someone, award it, and then that IPA firm typically has a much more condensed timeline than DCAA typically does when they keep it in-house. So we'll talk about some of the impacts about that a little later when we talk about the independent audit firms. So again, I mentioned the business systems. There's always going to be a focus on these business systems. I think they're shifting now to the smaller and mid-sized type contractors to really focus on post-award accounting systems, estimating system, and the MMAS if there is a requirement for it. And we have our second poll question coming up. Please make sure you check that to get your CPEs. Okay, so let's talk a little bit about Truth in Negotiations Act audits, or the Truthful Cost or Pricing Data Act. So really what governs this is 10 USC Chapter 271. And really what the focus is on certified cost or pricing data, the certification, the timing of that certification, and then what certified cost or pricing data or information did the contractor have on hand at the time of that certification. So DCAA does perform an audit called a truthful cost or pricing data audit. A lot of the community still calls this a defective pricing audit, looking for defective pricing, which is basically looking to see if there was there a negotiated contract price that was increased by a significant amount because a contractor didn't submit or disclose cost or pricing data that they had readily available. So for contractors, the burden of proof is fully on the government for this. DCAA typically does not just pick these audits by themselves. When DCAA performs a forward pricing audit, they do have a checklist they complete at the end of, based on all the identified areas that they saw while they were auditing, what is the risk of defective pricing? And they rank it 1 through 10. So they will take that listing and all those items on there. And then they'll also work with their buying commands to identify if they had any contracting actions that they thought were higher risk as well. All right, so DCAA is working in coordination with the contracting officers on this. Typically, it's going to be on actions that DCAA audited, but it does not have to be. If I can get the slides to go next. Okay, so we'll talk a little bit about DCAA's report to Congress. So DCAA really submits this report to Congress to substantiate, why do they exist? What value do they provide to the DoD? There's so many different DoD agencies. They really try to sell their services in here. Oh, see, is there a question popping up? Okay, if there is, happy to answer as we go
No.
through.
Yeah, no, it was for something else.
Okay, yep, not a problem. Okay, so in DCAA's report to Congress, one of the major things that they focus on is, what have they done? How have they benefited the DoD? So you can see they examined about 254 billion in contract cost. They identified 5.4 billion in audit exceptions and reported 3.5 billion in net savings. So the big thing that they sell themselves on is their return on investment. So for every dollar that they cost the DoD to be a performing agency, they save about $5.10. And we'll talk a little bit later about really what do those metrics mean? How accurate are they? What do they mean to contractors? So the ROI that they compute, DoD takes their annual budget, which is about 686 million, and they pretty much just divide that by their net savings to get the return on investment. The 685 million, they do use their direct audit hours by audit type. And I can tell you, DCAA shifted to really tracking direct hours by assignment when independent public accounting firms were kind of coming into the mix and performing those incurred cost audits. Having been a previous supervisor and manager there, anyone that was kind of indirect was just charging a single indirect code. And then once they had to start to compete and track metrics to see how DCAA's performance compared against independent public accounting firms, then their timekeeping policies and procedures completely changed, where now all of those previously indirect type functions were now recording their time specific from a direct standpoint for each of the audits that they were performing. So a little bit of a change to ensure that they were being comparable. So let's talk a little bit about their return on investment on audit type. So you can really see down here on that third bullet, the return on investment is about $17.40 for forward pricing audits, $5.30 for incurred cost audits, $2.80 for claims and terminations, and then 30 cents for business systems, CAS and TINA. And now business systems, CAS and TINA rarely do question costs kind of come through on those. Those are more checking for compliance and have longer lasting results, where if they can give an opinion on CAS or a business system, that that's typically good for years, compared to forward pricing and incurred cost, which is either for a fiscal year or a current period. So you can really see DCAA's bread and butter is the forward pricing audits. That's really where they have their highest question cost. It's where they are sustaining the most question costs. So you can see that's really where their focus is on a lot of this. Now, when DCAA computes their net savings, they're only taking actions that were negotiated. So if they did, had an audit report that questioned, $500 million and it never was awarded, and nothing ever happened with it, that is not something that would be included. And one other interesting item on here that some might not be aware of, DCAA does have an audit investigation division. Now, DCAA specifically does not audit for fraud. They don't have steps to specifically look for fraud. Any of you that have gone through a DCAA audit, they ask those 3 fraud questions that come right from GAGAS, is management aware of any fraud or any wrongdoing? But if DCAA, through their typical audit procedures, does suspect fraud, they would refer that to the DoD criminal investigation divisions. And then those divisions work with DCAA's internal investigation division. And DCAA's division has been able to help some of those and prosecute, resulting in monetary recoveries of about $705 million. Okay. All right, so looking at a little more on so DCAA sustained 3.9 of $9 billion in question cost for FY 2023. So we'll talk a little bit about what sustention means. So DCAA, when they question cost, that is a recommendation that goes to a contracting officer. That contracting officer then is responsible for taking, all of the information that they were able to gather internally, as well as DCAA's audit report, and then negotiate a position with a contractor. So there's a lot of different pieces that go into this. DCAA is responsible for getting feedback from the contracting officer to determine, hey, did you use my audit report? Were you able to, break it down and, sustain all of the cost on direct material and direct labor and indirects? And there's a little bit of back and forth to be able to determine, what exactly was relied on in the DCAA audit report. And then further than that, what was actually sustained in negotiations. I mean, a lot of times, there might be differing opinions and there might be a handshake of, yeah, let's just take 5% off the top and call it good. So then DCAA is kind of responsible for figuring out how does that impact on there. So you can see their highest suspension rate was 53% on forward pricing. So that means if you had an audit report where DCAA looked at your cost proposal and they questioned $1 million, the contracting officer was only able to sustain about 50% of that. So, don't take an audit report as the end of the world, that the findings in there are, I can't lose this much money on something like this. There's always a negotiation to it. And on the best case, there's only about 53% that is being sustained in negotiations. And then you can see systems, the lowest is systems, CAS, and TINA, which is about 28.6%. All right, so for incurred cost audits, DCAA claims the average length of time to complete an audit is about 188 days. So that's really from when the adequate submission was received to the date that the report was actually issued. And so that's actually down from 2018. It was pretty high, around 230-ish days. And then is actually down from the last 3 or 4 years, 16 days, which is actually pretty significant for DCAA. So it's good to see a trend coming down. Hopefully they're utilizing some more technology, being more efficient as they go through and perform their audits. So DCAA also had about 124 audits that they solicited to independent public accounting firms. They've been doing this since about 2019, and it's always hovered right around 110, 120. So it's been pretty consistent with that. I don't think that will change going forward, but it's good to see that they did have that requirement. And then again, as I mentioned before, DCAA putting that strong focus on advisory services. So they're doing things to help contracting officers in negotiations. They're doing independent financial analysis, reviews on rates, lots of different things. And then they also help out in other transaction authorities, which are agreements that are not FAR or DFARS based, but they really are trying to work with buying commands to make sure they understand the specifics of what should go into that agreement. When I was at DCAA, part of my job at that point was working with the larger Army commands and actually working with them to ensure that specific language was included in those agreements. So as a contractor, you're held to what is in that OTA. So DCAA was very firm on trying to ensure that FAR type language was included in there, even though it's not governed by FAR, that there was citations regarding reasonableness, allocability, allowability, also, some of the other audit clauses in there to ensure that there is some sort of look-in on those contracts or those agreements. So just something to be aware of if you do work with OTAs.
Hey, Jeff?
Yeah.
Do you have a question?
Sure.
I didn't understand the definition of sustained question costs. Can you please explain a bit more slowly?
Yeah, absolutely. And I know I talk a little fast, so not a problem. Sure. So sustained question cost, when DCAA issues an audit report and they find question cost, so they found an issue, they found a non-compliance, they didn't agree with something that you had. If they had $1 million as question cost in their audit report, they send that report to a contracting officer. The contracting officer then is going to sit down at the negotiation table and say, hey, DCAA questioned $1 million here. The contractor is going to push back. I don't agree. This is why. The contracting officer, and then obviously negotiations occur. So for every single audit report that DCAA issues, on average, a contracting officer was only able to negotiate 53% of what DCAA questioned. So if DCAA did question or identify $1 million, a contracting officer was only able to sustain in negotiations 530,000 of that. So they couldn't get any more. That help? All right.
Yes.
Okay.
Thank you. That makes sense.
Oh, great. Yeah, absolutely. Okay. So here we can kind of just see a trend of the number of DCAA auditors and then the findings that they have. So you can kind of see the findings that they've had kind of drop down, the audits that they complete trending down over the last couple of years, and so are the number of auditors. You can see a pretty significant drop since 2020. DCAA has been losing auditors. I think a lot of this was kind of due to COVID and just the ability that a lot of these auditors had. I think most of DoD employees typically stay within the federal government. And I think that when COVID happened, there were a lot more remote opportunities that opened up. So DCAA auditors were kind of able to jump ship. I know there were a pretty significant amount like myself that also kind of jumped over to the public and private sector, just looking for something different. But this is kind of why DCAA had that big focus on really trying to retain and recruit to be able to get their audits back up and then get their staff back up to be able to perform those audits. DCAA also had a pretty significant turnover in the last 2-3 years in their executive employees, pretty much across the board. I think it's almost completely turned over, which has really allowed for a lot of upward mobility. So all those, regional managers have moved up now into the executive position. The branch managers and resident auditors have moved up as regional managers. Supervisors have moved up, and then pretty much, and this is my personal opinion, that a lot of the well-rounded and good auditors moved into those supervisor positions, and then they were left with some of the greener and newer auditors actually performing the audits. DCAA, again, hired between 550 and 600 auditors. So you have newer supervisors supervising newer employees. So I'm sure some of you have probably seen some of those green auditors coming in. I actually heard a comment the other day that it seemed like a newer auditor had kind of gone rogue on a system audit. They had never done it before, and they sent over a questionnaire to one of a contractor basically for their system, and they swore it had been written by ChatGPT because none of the questions made sense. There were 160 of them, and they just didn't flow just how they were written. So I think DCA's got a little bit of work to do in just getting a lot of their staff up to speed.
Jeff?
Yeah.
Question. Oh, and a polling question too.
2 questions.
Does DCAA target certain company sizes for an outsourced audit, i.e. smaller companies?
I think they are required to have a mix. So we're talking about the independent public accounting firms performing the incurred cost audits. So I've seen some of those solicitations. They do vary in size. So they do have a pretty good mix. I don't think they have any of the independent public accounting firms perform it on like the top 10 major contractors, but I think there is a pretty good mix. And I've seen them go anywhere, from the $5 to $10 million range up into the hundreds of millions. So I think it's a pretty good mix.
Great.
All right. So looking at the number of audit reports completed and the dollars that they looked at, you can see really where they focus. The majority of the dollars are centered around incurred cost, but you can see that the majority of audit exceptions, or what they call question cost, is really on forward pricing. So that's where you see, as I mentioned before, their bread and butter is really on forward pricing, where they feel they're making the biggest difference in saving taxpayer dollars. Again, systems, CAS, and TINA are areas that don't typically result in a ton of question costs. Most of that really coming from TINA or a CAS impact if there is a cost accounting change or a non-compliance that they found to recapture some of those costs. But that is really where a lot of the focus is. So you can see DCA issued about 2,300 audits, which is slightly down and continues to trend downward. All right, so we'll talk a little bit about their net savings again. So here you can see really where the dollars line up. So a lot of the net savings, again, where they really sustained a lot of that question cost is in forward pricing. So you can see really on incurred cost, they question a lot of dollars, but they don't really save a ton on it. So you can see, $5.30 for every dollar that they spend compared to $17 that they save for every dollar they spend doing a forward pricing audit. And, some of that is probably based on the length of time it takes to perform an incurred cost audit versus a forward pricing audit. DCA also does audits of claims and terminations. Again, those are pretty lengthy audits as well as compared to forward pricing. Again, return on investment a lot smaller there at $2.80. And then systems, CAS, and TINA, since there's typically not a lot of dollars that are coming out of those audits, is really, what is the compliance of a contractor's system, and then providing a different benefit, going forward, that if they do have an adequate system, that there's reliance that can be placed on their data for the next 3 to 4 years. All right, here we kind of get back to that percent sustained, really looking at the dollars. So you can see for forward pricing, if you took all of DCAA's, 500 and odd forward pricing audits that they had, they questioned $4.4 billion. But when that went to negotiation with all the different contracting officers, they were only able to negotiate about half of that. For incurred costs with the ACOs, DCAA questioned about $4 billion, but was only able to sustain about 1.2 or 30%. And kind of to give a little bit of flavor on, how DCAA computes this. As I mentioned, they do work with the contracting officers to find out specifically, what did they go ahead and use out of DCAA's audit report? And they're supposed to have a conversation with them and say, was the report helpful? Were you able to rely on it for each? And they should be breaking it down by each of the cost elements that they opined on in that report. So they really should be having that discussion to have an understanding of what was used so that the metrics that they are reporting to Congress is accurate. One thing to be aware of, if you're a contractor who submitted a proposal and you had a quote from a vendor, and then that vendor came back throughout the actual audit process or during negotiations with a lower number, and say they submitted you a quote for material that was $1 million, and they came back and said, hey, we can do this a lot cheaper now. We had some other efficiencies, some things come up. We can now do it for $500K. When you submit that to the government and submit that to DCAA while they're doing the audit, DCAA will include that in their audit as question cost. Now, you can see something like that is 100% going to be sustained by a contracting officer, right? It's something the contractor, independently disclosed. It's something that DCAA is including in the report. So at sometimes they are taking credit for that. That is something that goes in these numbers, which is why you can kind of got to look at them take it with a grain of salt. On the flip side, though, if the other thing happened where a contractor submitted or a subcontractor submitted a quote for $500,000, and then down the road they redacted that, quote expired, they had to submit a new one, and now the cost doubled, that would also be reflected in DCAA's report as an upward adjustment. So they do kind of try to play it fair and reasonable. I know that's the name of their name of their game, right? And fair and reasonable, but just something I wanted everybody to be aware of. All right, so looking at incurred cost audits, you can kind of see the number of reports compared to the number of memos, and memos specifically refers to a low risk memo. So you can see there are much more low risk memos that are issued. DCAA does kind of put their sampling plan. It is publicly available if anyone wants to search it. It's on their website just to see, the size of your incurred cost submission. And then previously, if you've had any findings, pretty much what sampling you fall into. They end up going into a pool. DCAA ends up picking, 5%, 10%, 20% to audit. And that's really how they figure it. There are also some that can be tagged as high risk that are not even put in the pool, and they're going to be audited because you either showed high risk on some of your audits throughout the year, you had pretty significant findings in the prior year, you had business system deficiencies. So DCAA does have a little leeway in how they select these. But you can see on a lot of it, the reports, even though the number is much, much lower, there are significant more dollars in there. So they really are focusing on the higher dollar submissions. All right, so we'll talk a little more in detail on the NDAA that resulted in the independent public accounting firms performing those audits. As I mentioned, 124 were completed in 2023, pretty consistent as it has been over the last couple of years. So I've kind of heard different feedback from government contractors on independent public accounting firms versus DCAA. DCAA, when they perform audits, I'd say they're much more gradual. They span a longer length of time, and you got a little more leeway, I feel like, in your response time to them, where when you're working with an independent public accounting firm, typically they're going to be much more deadline driven. They're much more budget conscious, so they're really trying to get in and get out as fast as they can. So they'll drop a request of a couple hundred items on you, expect it back in a couple weeks. And, depending on their deadline, as I mentioned, that they typically have a shorter deadline than DCAA just because of how the reporting process and the solicitation process really works. They are trying to cram that in a little more. So I've heard different feedback. Some contractors like when the independent firms come in, they know they can dedicate, a couple weeks, couple days, and just really focus on getting that information out, where a DCAA audit can definitely tend to drag on. So just a little bit of a take both ways. But it seems like these are here to stay. This is something that is not going to change going forward. And as far as I've heard, I don't think the number of independent public accounting firm audits are going to change as well. All right, so as I mentioned, DCAA does have to pass a peer review every 3 years. The last one that was done was for FY21. So one is definitely coming up or will be coming up for FY24. So the actual peer review that was performed in FY21, because of the 2018 NDAA requirement, had to be done by an actual independent public accounting firm. All of the prior years were done by the DODIG. So they kind of wanted to get a little more independence rather than having a government agency perform it. So when these peer reviews are done, DCAA can receive a rating of pass, pass with deficiencies, or fail. And DCAA actually received a rating of pass on this one with no deficiencies, compared to years prior where they always got cited with pass with deficiencies. And kind of the funny part of that is DCAA is held to the GAGAS requirements, the Yellow Book requirements for performing government audits. And they had policies and procedures that were much more stringent than what GAGAS required. And all of the findings that DCAA typically had were against their own internal policies and procedures and their failure to comply with them. Not that they weren't complying with GAGAS or Yellow Book, but that they weren't actually complying with their own internal procedures. So over the last couple of years, they've really taken a good look at that to ensure that they're doing exactly what they should be doing. So you can see Acuity is the firm that performed this, and they looked at 69 audits. So what they're really looking for is really what is DCAA's quality control system in these audits. They're looking to ensure that they were following their policies and procedures. Let's click on over to the next. Okay, sorry. Should be one more slide in there. So really what they were looking for is looking at the different audits. This actually did include some of the independent public accounting firm audits as well. So it was good to see that they got a mix of those. They were looking at audit reports that DCAA issued, audit reports that were terminated and or canceled to ensure that DCAA followed the proper procedures with that. They looked at the quality of the report and that everything was referenced and supported in the supporting documentation that they have, and that they drew the correct conclusions. So a lot of different things that they're looking for in that, but it was good to see that DCAA did get a pass rating. All right. So I think this one popped up a little early, but we will talk about this one in a second on the compensation caps. So go ahead and give it your best guess. I think Brigida may have mentioned this before, so we'll see how many know it. All right, so circling back to DCAA MRD. So some of the more significant ones was they issued guidance internally in a joint effort with DCMA on computing unilateral cost impacts and really looking at increased cost in the aggregate. So there's a lot of debate on this one right now from industry. I think there's a couple specific industry organizations that are conferring with DCAA, DCMA that they don't necessarily agree with the guidance. So I'm waiting to see if this is something that does rise up to the CASB board, or what DCAA, DCMA's response is going to be. Shifting over to the one on the right, real-time testing. So last year, DCAA changed their guidance on when they perform floor checks, which is the real-time audit of labor, and then the purchase, existence, and consumption. So DCAA used to call these a MARS 6 and a MARS 13. And MARS stood for Mandatory Annual Audit Requirement. And I can tell you they never did these manually or annually. So they really changed their guidance, not really to benefit the contractor that it's not a requirement to do it annually, but just because they couldn't keep up. So really now it is all risk-based. So if there is risk, then they will do it. So that's really it. And I know we're getting short on time, so I'll kind of scoot through on these a little bit. So I know Brigida mentioned on the comp caps. So the current comp cap is $640,000 for 2024. So hopefully everyone got that right. So I want to talk just a little bit about this. I know we've got some good info on the slide, but really, I think Brigida mentioned on this that a contractor is still responsible for demonstrating how that $646,000 is reasonable and allocable to your contract. So just because you pay an executive $1 million, you back out the other amount as unallowable down to claiming $646,000, you are still required to establish how that is reasonable. And I know at a lot of smaller businesses, it can be a little challenging, because when DCAA comes and looks at this, they look at your business size, your annual revenue, number of employees, location, and then that person's title. And at a smaller business, an executive or a CEO might be doing more than just their individual title. They might be performing several functions. So my kind of, tip or advice on that is to really get an understanding of what is that person's job and what are they doing outside of their title, and then look at some salary surveys to see if you can pick a different title or really demonstrate where their duties actually lie to be able to substantiate that. All right, so looking at the comp cap, this really just shows how it's computed. It is just taking the prior cap amount and multiplying it by a change in a Bureau of Labor Statistics index. And then we do have that index listed on here for you as well. And then just to kind of show the current trend in the comp camps or compensation cap. So you can see 646,000 for 2024, up from 2023, which is also up from 2022. And that's just the formula down there just to show you the change in the index that is occurring for that. All right, so some of the new and ongoing initiatives for DCAA on this one. So as I mentioned, they have 550 new hires. And now let's talk a little bit about what new hire actually means. As I mentioned, DCAA staff is pretty green. So what they did over the last couple of years was initiated a pilot recruiting program, and they identified specific auditors, supervisors, people that were DCAA personnel, and pulled them and made them full-time recruiters responsible with coordinating with multiple universities. So they strategically selected 70 college campuses that they wanted to maintain a significant presence on, really trying to, follow what the IPA firms do in performing that college recruiting. So what they did is they temporarily assigned them. Each one was responsible with, recruiting X number of employees to really bulk that up. So that's something very, very different than what DCAA has always done. DCAA really has kind of just relied on going to a couple of job fairs here and there. They've never had that dedicated presence at a university, which is something that they are starting to do. So what that kind of means, though, is that the majority of their new hires that they have are right out of college. And I think, internally, DCAA kind of says that it really takes 2 to 3 years to get someone with accounting experience up to speed on government contracting compliance regulations to be able to have, an auditor who can kind of do things on their own. So what that means is expect to have a lot of green auditor questions coming up if you do go through an audit. So some of the other things that DCAA did, they contracted with Handshake, which is a virtual recruiting tool that they did use to try to target some higher education students and alumni to be able to bring in some with some experience in addition to those new college recruits. And they've actually beefed up their LinkedIn postings quite a bit. So they are starting to get with the times, which is good to see. All right, so this is a big one. So as I mentioned before, DCAA putting a focus on technology in that strategic plan. So what they did is they started the Chief Digital and Artificial Intelligence Office. So I mentioned that was the office that really focuses on how can they build and innovate with DCAA's internal technology, as well as what can they put together to benefit their customers. So really what they're doing is they're looking at new technology that they can utilize. One of the things that they've picked is called Epic. So DCAA had a pretty archaic internal data management system. So something that accumulated all of their audit data, all of their contractor data, and they're really trying to take that up to the next level. I believe it was from 1999, the software that they were using. So it was pretty old. So they are utilizing something. It is expected to have AI type functions in it. And I think one of the biggest benefits of that is that if a newer auditor comes in and is performing an audit that has been performed on a contractor before, that new system should be bringing things out of those reports and out of those work paper packages to help that new auditor so they don't have to ask you some of those same questions that they do year after year, audit after audit. So not saying they're not going to do that, but know that they will have some tools that should help mitigate some of that. So one of the other things that they've done, this is that last bullet, is an audit request issuance, engagement, and status portal. So they call it ARIES. So what they are trying to do is make a one-stop shop portal for DCAA, contracting officers, and contractors to utilize throughout the audit lifecycle. So anything that DCAA submits to a contractor is put in that portal. The contractor responds in that portal. The contracting officer can also use that portal so that you don't have multiple requests coming from multiple areas. You can just point to that portal and say, hey, I already uploaded that. Go ahead and grab it from there. That is in phase one. I think DCAA has designed it. They're really just trying to figure out, where are they going to house it and put it. I think PIEE, the Procurement Integrated Enterprise, is really where they're trying to focus that, but I don't think that has been decided yet. And I think it's a budget constraint issue. So I think they're trying to figure out, where best to put that. All right, so the contractor submission portal is one that DCAA pushes every single year. It does help. I typically do recommend it to contractors as well to use it, just because you have a record of it actually being submitted. I know, especially at DCAA and DCMA, your contracting officer that you might have had last year might not be the same this year. And if it's not one that you're regularly corresponding with, it is hard at times to find that. So by submitting it into this portal, there's no question on that it's going to the right place. You get a receipt that it was actually turned in. So it is definitely something that I recommend and I think can be helpful. All right, and then the last one that they have here. So the information for contractors guide. So DCAA has always had this on their DCAA public homepage. They recently updated it because the one that was out there before was dated 2012 and it was significantly outdated. It didn't even comply with some of the updates in the FAR. So it was really good to see that they did kind of go through this with a fine-tooth comb and make some updates. I think this is a great guide for new GovCons to really have an understanding of what some of the requirements are that DCAA is looking for. So you can see kind of on the bullets there, they have some general info on really the contract life cycle. I know Tracy and Brigida kind of talked about some of this of, putting together provisional billing rates, submitting incurred cost, final settled rates. So they have a lot of good info on there. They've got info on, what should be included in price proposals, some information on CAS, really what you should be putting into your vouchers that are submitted into wide area workflow for government submission. And then also a lot on the incurred cost process as well as timekeeping. So there's a lot of good things on there. So I always recommend those to go to others. And with that, are there any questions that I can answer that may not have popped up, while I was going through everything?
There's no questions in the question chat area.
Okay, great. Well, yeah, my contact info is on there. If anyone ever has any questions, anything DCAA, audit related, compliance related, feel free to reach out.
Great. Well, thank you, Jeff. And this has been another great, learning event. And we really appreciate everyone spending their morning with us today. I hope you got a lot of value out of it. Before we do wrap up, I'd first like to thank Tracy Sheps, Brigida Scott, and Jeff and Nessa for this great and interesting learning experience for all of us. I'd also like to thank our exceptional marketing team at Cherry Bekaert, including Amanda Kiefer, Leah Gearhart, Maddie Robbins, Ziba Farha, and Kate Dharma for preparing and running today's event. Couldn't have done it without them, for sure. Our next event will be Virginia Ethics with Jennifer Lewis, a talented trainer with over 30 years of experience as a professional instructor from the AICPA's Business Learning Institute. I'm sure you'll find Jennifer to be very knowledgeable and entertaining. Last slide. Finally, I'd like to thank all of our sponsors, especially Cherry Bekaert, for the great program and presentation today. So with that, thank you, and we look forward to seeing everybody next Thursday. Take care.